Traders at UBA said the Treasury bills market is closing the month mixed, with sideways interest observed in papers maturing between February and May 2025. Meanwhile, the local bond space is trading calm, though with a bearish bias. Kenneth Onuoha, team member assets and liabilities at UBA, joins me now for more market movements. Kenneth, thank you for joining us today.
Thank you for having me, Esther.
Well, let's start with market action across the different segments, starting with the money market. Bring us up to speed.
All right, so the money market's system liquidity opened on Monday with a net debit balance of about 46 billion. This is owing largely to almost auction settlement of about 1.158 trillion on Friday. So on Monday, we opened with a debit balance of about 46 billion. However, as at midweek on Wednesday, we saw that there was an upturn in the system liquidity, with it opening at about 478 billion. This again was on the back of FX maturities, swap maturities that were yet to be rolled over. At the close of business yesterday, following the OMO auction settlement and NDF payouts, we saw system liquidity rise to, or drop about to about 149.5 billion. Now, despite this decrease in system liquidity, we did see that OPR and overnight rates did drop or show a decline to about 28.84 and 29.56% respectively.
Right. So take us to the bond market. I know there's some new papers, 2029, 2037, and 2049, but there doesn't appear to be a keen interest on these papers. Tell us more about that.
The interest is largely due to the fact that there is, of course, liquidity hasn't been exactly,
right.
The system has not been awash with liquidity. So expectedly, people are not exactly so keen in showing their investments or in investing along those lines, especially with the kind of yields that the Treasury bill space is actually throwing up right now. The interest more is seen around the Treasury bill space. Right.
When we take a look at trading this month, in terms of volumes across the different, especially between the bond, especially at the bond market compared to the previous month, what can you tell us in terms of the volume difference? And just some highlights this month that perhaps are different from the previous month.
Oh, okay. Largely, this market is essentially a liquidity-based game. Month on month, the volumes and the trading volumes in the bond market is quite low compared to the previous months. Now, what we see largely, however, is a lot of sell interest. A lot of offerings are being made. However, there are little or no very scarce demands for this bond. It even translates into what we saw at the bond auction. Month on month, we saw that the month of May showed very slight interest in the bond auction space, as opposed to what we saw in the month of April.
Now, the president told the National Assembly on May 29 that they should expect a supplementary budget for the 2024 fiscal year. And before then, we had comments from the DG of the DMO, Debt Management Office, saying that the government, out of the 6 trillion naira deficit for this year's budget, about 4.9 trillion has been raised so far. And there was a lot of talk about how liquid the market is and how, on the domestic side, they're not doing too badly and are confident that the government can raise bonds or the amount needed to fund the budget. So what are your thoughts? It might not come in the month of June, but if it does, and we don't know what the number will be at this point, it's all speculative. But what are your thoughts in terms of this market interest and the DMO's activities for the month of June?
All right, so I think one thing that the government has gotten right is the fact that they have helped to attract foreign portfolio investors. Beyond that, they have also helped in allowing people establishing confidence in the fixed income space in Nigeria. We've seen auctions that have thrown up very astronomical numbers, well over 1.16 trillion. We've seen 1.4 trillion. All of this is evident to the fact that there is a market here in Nigeria that needs to be tapped. And the DMO is actually keen into all of that. Now, what we have seen largely is we have seen that there are interest in the government securities that currently investor appetites are increasingly high, when rates are trading at 22.34 and 22 the last OMO we saw it at about 22.49%. These are very interesting yields for investors. Now, what do we think that this would happen in June? Of course, we cannot be too sure. But what we do know is only on Wednesday, on 29th, we saw the DMO release the T-bills calendar for Q3, and about 1.56 trillion is actually supposed to be raised from the auction in Q3. Now, of course, that would naturally take us to the 6 trillion that we are looking at.
Right.
And all right.
Well, we're going to have to leave it there. Thank you so much, Kenneth, for talking to us today. We appreciate your time on the show. Kenneth Onuoha, team member, assets and liabilities at UBA, taking us through trading at the fixed income market this week.